Please welcome Dharamveer Singh Chouhan. He's a co-founder and CEO of Zostel. Welcome Shanti Mohan, founder of LetsVenture.
Keshav Inani, founder of Vananam Group. Amar Ummat, founding partner and chief revenue officer at Recur Club.
Thank you for everyone getting together this evening. The panel on my right is phenomenal. I've already been instructed very crisply by the internal team to ensure you all speak the max, and I am just contributing in terms of moderating and getting sufficient time for networking. We did discuss a couple of numbers right from the introductory video that started, as well as where Rahul left us, which was to do with the number of startups that have increased. Shanti TV, I would love to kickstart this discussion with the two of you, because you have not only contributed to the ecosystem, you have operated in the ecosystem over a decade. So Shanti, to kickstart things from you, we looked at a couple of numbers, 250 odd startups in about 2014. We're saying 100,000 plus startups, which is a 500 times increase in the startup ecosystem. You have seen it both from the outside as well as the inside. What, according to you, are the driving factors behind this growth, which are pushing this ecosystem forward right now?
So thanks for having me. If you look at, I think the number 250 doesn't seem right. I think there were a lot more startups when I started LetsVenture. So LetsVenture was founded in 2013. And, we did our first funding online in 2014, right? And we already had about at least 200 companies on the platform. So I think the 250 number, I'm not sure if that number is right.
Yeah, notes for the record team. Let's take that.
I think if you kind of look back at the decade, I think one of the major factors of the boom in the startup ecosystem, in my mind, was actually the Startup India movement starting, right? So after the new government came in, I think 2015 was when Startup India was formed. And, sometimes as an entrepreneur, I believe that, you need that ecosystem to also be built around you for you to be easily be able to access resources, access a lot more support as founders. And I think just that focus on startups from Startup India, and I know most of the founders don't want the government to be there, right? In whatever we do, we say, the further away you are from us, the better it is for us. But I think somewhere at a macro messaging level, I think that entire push and focus towards startup was actually what also helped other founders know that when I start up, there is already an ecosystem which is going to support me. So I think that is the first, I would say that is the first kind of point which I have seen. Second is, I think we saw a very big success with Flipkart, right? It was the world's largest e-commerce acquisition. And that, somewhere, we know that those stories are, probably one in every decade, right? But I think that story gives you hope. It also tells you that, we can break the glass ceiling as a founder, right? I mean, you can kind of aim for whatever you want and you can achieve that. But I think that propelled a lot of focus onto the India story. There was a lot more global capital looking at India. And, I have seen that shift in the last decade after COVID, right? I mean, during COVID, a lot of companies shut down, right? And I think before COVID and after COVID, you can clearly see the difference in the entrepreneurship and the quality of founders.
Right? Very interesting.
Because,
sorry, please.
Yeah, we've probably seen the largest, I would say the largest kind of challenge which founders face, right? Every business model was turned on its head. EdTech market, which was probably not going to grow for the next 10 years, grew it kind of had accelerated growth. So there was a very large change in how things started to happen around us. And I think what happened post-COVID is the quality of founders has gone up probably 3x, right? Because today people are consciously putting, how do I address a Black Swan event as a founder, right? So consciously people are talking about, how do I actually, look at my business when a very unexpected event kind of hits my business, right? That's the first time I have seen founders put that on a pitch deck.
Yep. I mean, the theme that you left us with, Shanti, is something that we've also been viewing at Recur. Across the 800 companies, suddenly the theme has become from growth to resiliency, and it's also the perfect time for me to cue Dharamveer in. DB, I know the folks here would love to hear about your vision, how you thought about Zostel, considering that we're talking about entering the space back in 2014, where it is pre-UPI, pre-Razorpay split, pre-free internet, pre-Geo, yeah, pre the penetration of consumerism is how we're seeing it. But you were undeterred in how you build Zostel. I have a curious question there. One, why? How did you think about this particular space? Because there was not so much hoo-ha in the startup space. And secondly, you built out of a non-recognized tier 1 city. What was the one area of focus? Why a tier 2, tier 3 city? And two, how did you scale post that? And does the geography have something to do with while you were setting up?
Lots of questions.
I know. I'm going to break them down one by one again.
No, I'll pick it up. It's largely the story that you're asking about, right? So I come from Jodhpur, so that's where the first hostel started. Obviously, you should be smart about taking risk, home ground advantage. I've seen enough cricket and football to know that. And so I had a whole tech startup, a gaming studio before I started Zostel for 4 years from 2008 to 2012. That got acquired by Zynga. I came to Bangalore. I was the youngest game designer back then. So it was full on techie. And so, startups have always been there. Now it's the first time that, now I think I've grown in the ecosystem. So I'm seeing now that, this is post UPI and, post COVID, etc. Good to see, in that sense, I would say. And so you can see that, it's kind of like cyclical, so a lot of startups, let's say 2007 to 2010 batch, let's say Ola, Flipkart, etc., Snapdeal, lots of those gets funded, and then you see how the cycle turns out. Lots of e-commerce startup got funded from 2010 to 13, 15 as well, independent niche sectors that probably felt that they could scale. All of them probably shut down. 14 to 16, so Zostel, I just started it off with a larger idea. I was very lucky in the sense I backpacked across Europe when I was 21 with my whole tech experience. And I experienced backpacking. I was in the top institutes in India. And I felt that the real education really happens when you travel, explore, meet other people and cultures. And literally always in life, been curious about learning things. So wanted to bring that experience back in India. And I already had a struggling startup. So I waited for a couple of years to study why there are no hostels in India. Okay, so I did a lot of research, every Chrysler, Euromonitor, everything that was there in IM, everything I studied. And I couldn't find out. I asked people, every investor I asked, everybody told me, no woman will ever stay over here. This is India, boss. It doesn't work like that. And so when I heard no from everywhere, I got, somehow I don't even want to get into that. It's a whole story. I made money through poker and got lucky, I think there were some cosmic blessings over there. But, so I put all of the money of my own in building the first 3 hostels. In Jodhpur, I started first. Our friends came in. Then we put up another in Jaipur. And these were the first things. So the whole hostel was the first backpacker concept in India. I'm sure a lot of you guys still don't probably understand. But then later on, there was this movie called as Queen. Okay, so if you know the Queen movie, so it's kind of like
We've
that.
all danced on London to Magda. Everyone.
So we brought that concept to India. It's still, it was just started as a, naive experiment, going against, I was very young. I was 22 when I started this, right? So very anti-corporate, right? So don't like the suits. So we'll, young people travel and everything. So, but, since then, we continued to scale, we pivoted, we realized that this is very anti-venture, all right? So venture capital really hated Zostel. Everybody loved me, but everybody hated the business in the sense that venture capital couldn't take that much risk back then, so it's a business that takes, let's say, 6 months to 12 months to come to life. Whereas venture capital largely prefers tech-based software businesses that can do, 100x in 6 months. So it was profitable. So we always feel, I built a profitable business, right? Yeah, it's profitable. That's what the business needs. But if you want to build venture, the whole theme was to not be profitable. If you're profitable, it's a whole issue altogether. Then you have a multiple, etc. It's better to make losses, and then raise more funds. And so, in that sense, I also did that. I built a whole business, another business product called as Rooms. I raised $50 million over there, exited that to Oyo. And Zostel has been actually, because anyways, no one's were really interested in that. So we really bootstrapped it out. So for the last 10 years, we got an angel check when I was in IIM Calcutta before we graduated. Since then, Zostel has really just organically with that 50% compounding profitable rate. Over the last 11 years, we have grown. And the numbers weren't correct. Actually, we are today at 130 properties. And we do...
Notes.
No, that's fine. Probably some earlier PR update would be there. And... we just opened another product called as Zo Houses. So Zoworld is the parent entity. We do real estate products. It's largely catered to the youth segment. But we do everything. We do resorts as well, etc. So once again, it's not really budget. You've been there, bro. We're selling rooms for 20,000 these days.
You can take my word for it. It's beyond budget for sure. But DB, I will just want to you did speak about a very important aspect, which was homegrown turf, homegrown advantage. Looking at the analogy of a football game or a cricket game, any disadvantage that you face because the sectors were nascent. VC as an industry was nascent. So any disadvantage to not building in your tier 1 cities that you thought, or if there is something as an advice to the room?
Yeah, if you really want to make money, you should make dollars, guys. Okay, there's a 100x difference. So you will always have that disadvantage in India, right? And then obviously, then it comes with its own sweet advantages. Disadvantages, I think, we all can talk about the country, And obviously, then from a regulatory standpoint also, you want to push things around. So those things will be there. But, you must embrace. Then there's enough regulatory freedom also, in the sense. Even today, we've been working with the government to, bring out the backpacker license. We really help them design, understand. And today we are actually the world's largest backpacker hostel chain. So we are taking the whole thing. We are trying to be mature about the industry, bringing real estate, etc.
It will be super exciting. I think there's another very important theme that you discussed, which I know, Shanti, you will have multiple aspects to discuss, which was profitability versus valuation. But before we get into that, I just want to highlight one key number that I have here that I've been wanting to address, which is 1.3 billion was facilitated equity capital. This number is right because I also pulled it out in 2013. And it was roughly about, upwards of $20 billion in 22. The deal volume has increased almost 50x. Keshav, you've been in this industry.
I'll just add, super excited about the IPO exits, man. That's
Exactly.
where, I think Zomato, etc. are showing also that you don't even need to have that large scale exit. You can really grow with the public market. So I think that's another whole cyclical thing that will push up.
Yeah, the development of the public market, especially for this particular space. But Keshav, just to cue you in and understand, because you've been on the audit side of things, you've looked at startups, you're building multiple businesses. You started from a trading business, you built a tech business, and now you're foraying into other businesses. We have seen the upcycle, which came somewhere in 22. Then we saw the so-called funding winter, which was the down cycle. In both of this, capital availability for the right bets was always there. Any thoughts around how you are building your company and what was your approach when you started building?
Yeah, so when I started building Vananam, right, today we complete 3 years of Vananam, by the way, right?
Congratulations.
Our first company. I started off at the peak when if you were in Bangalore, if you were based out of HSR, and if you had tech in your name, you would raise funds. You would more often than not get through your angel round, you would reach your Series A, and people were just looking around to put money in. When we started Vananam, we also started as a platform very similar to people. I was a Marwadi, तो मैंने बोला यार Marwadi से पैसा लेके डालेंगे, धंधा बनाएंगे, startups में exit देंगे. But when I was evaluating companies, I only could go ahead with 5 companies out of 180 odd startups that we evaluated, right? And my base reason of why I did not understand startups, which of course got funded from somewhere else, some other player, was they all said, we are going to burn this much money to do this product, reach this scale, or investor iska paisa dega. And in that case, I was supposed to be the investor, and they said, मैं इसका पैसा नहीं देगा. Because if you're going to invest money, invest into capex, invest into tech, but have an outflow of it, right? A year down the line, when the so-called funding winter started, only companies which were profitable got money, and they got money at valuations they could not believe because everyone had capital. Capital had not dried up. The sources of applying those capital had dried up, right? Rather than taking 100 bets, you now want to take 10 bets. But those 10 bets you would invest in probably 1.5x of what you would do normally, right? So if you were doing business the way business was supposed to be done, growing it organically, being profitable, you would always get money, irrespective of the kind of market. It could take a month longer, but not more.
Very exciting. Shanti, you wear multiple hats as it clear to the entire room. You've founded LetsVenture, Trica, and you have also evaluated companies from an equity and a debt standpoint. Have you seen a change in your investment thesis with the so-called upcycle and downcycle, or has the investment thesis been very constant in terms of the kind of founders, the kind of market? How do you think about your investment thesis when you look at LV in particular?
So, from an investment thesis, I think because I'm an early stage investor personally also, the thesis has not changed much, right? I might change focus on sectors, But fundamentally, how I evaluate a company has not changed. Because in the early stage, you don't have growth numbers, you don't have proof sometimes of what is happening. You double index on founders, right? And for me, intuitively, that has worked very well, right? So when I have a conversation with someone, you basically evaluate them for how deep is the founder thinking, right? I think the depth of thinking and the clarity of the problem you're trying to solve, just like what he was saying, you don't get deterred just because someone told you no, right? You believe that there is an opportunity to build. And I've faced the same problem with LetsVenture, right? When I started LetsVenture, again, this was pre-UPI, pre-Paytm, pre-all of those days, right? And people said, India is such a low trust society. You think somebody is going to write a 5 lakh check online to a company they've never met. But when you look at the market, when you look at founders, when you looked at investor founder behavior, you knew that if I had not built, somebody else would have built LetsVenture. There was a need in the market and that solution had to be created, right? So actually the thesis of how you invest doesn't change. Just that you probably learn a lot more as you continue investing. You know that there were mistakes you made in the past, which you start to correct, and that's a muscle you build, right? And honestly, I don't look at profitability because, then you go raise money from friends and families, you have banks, you have other forms of capital you can raise. Venture money is supposed to be high risk money. Right? It is supposed to back contrarian ideas. Yeah. It is supposed to change customer behavior, right? And those require capital to go change the market. Imagine if we had not betted on Flipkart, right? Because, when I was running LetsVenture, at least for 3 years, at every event, I would have 5 investors get up and ask me, why do you think investors are putting money in Flipkart? I mean, I don't have the answer there, right? I mean, that is somebody's capital, somebody is making a decision. But at the end of the day, Flipkart was probably the only company which created massive ecosystem wealth, right? I mean, they created 100 millionaires. They returned money back to all the investors, right? Because there was a change in investor behavior. And if you saw the latest report, Flipkart's revenue today is 2x the revenue of Amazon today.
Phenomenal. Wow.
Right? And that is a homegrown company, right? So if that venture capital had not backed Flipkart, we would not have had e-commerce in the country today, right? Yeah. If they had not backed Swiggy, we would not have had home. And our lives have changed today, right? The life-defining moments change does not happen through always thinking of profitability, right? So I think the venture industry is different. Right? And there is no right or wrong, right? There is a way to build a company where you're changing consumer behavior, like quick commerce, right? Today, India is the only country which has seen quick commerce, right? And when quick commerce came, and I remember 3 years back, everybody was bashing quick commerce up on LinkedIn, right? I would see investor posts saying that I have to pay 6 rupees more for now somebody to come and deliver to me, right? But look at the convenience it has created, right? So I think you cannot compare profitability with category creators, with why capital is going into those companies, right? And I think it's you cannot create those comparisons.
No, absolutely, Shanti,
because they have very different objectives on how they want to return capital.
No, absolutely.
Of course, lot of mistakes have happened in the ecosystem.
Yeah.
And I think the same VCs who went and invested today are preaching profitability. I'm like, the same guy who wrote the check.
This paradox is something that we're all dealing with, to be very honest.
No. But the same people, right? The same people who have chased, who have had FOMO, like my investors I see on my platform, they abuse us on the platform saying, "आप exit नहीं दे रहे हो." अरे यार, मैंने नहीं बोला था check लिखने के लिए. आपने decide किया था check लिखने. Like literally last week I get an email from an investor saying that, I have invested so many deals through LetsVenture and none of those startups are doing well. But, that is a choice you made at that point of time. So why don't you own to your decision? Nobody forced you to write a check, right? So I think, we are all very conveniently forgetting the 3 years back, the behavior. And suddenly we now want the whole ecosystem to start thinking differently. It does not work that way, right? And I think founders need to call the BS out, honestly.
Absolutely, yes. Shanti, this is extremely informative, and the general advice of all the folks that came on our cap table, one of the advice that really stood out for me when we were thinking was that you always have enough instruments to raise capital. There's equity, there's debt, and with the advancement in finance, there are multiple other instruments of raising debt. But the advice that stood out for us as well while we were building Recur was, before raising, think about deployment. Think about generating payback on the raised money, and only then will you have a successful, resilient business. I would love, DV, to hear your view on the flip side of what Shanti was saying. Does a founder's mindset change right from early stage raising to late stage raising? Or is there a change in just general sort of mentality? Any form of advice? Because you have seen both sides of the coin again.
See, I will just say maybe, about I think I totally agree with what, Shanti said, that, there are different kinds of capital. As I also mentioned that, as soon as I realized that Zostel is something that's more profitable, I can build a venture business. So I build a venture business. We are all aware of that. So over here, I would say that, when you're scaling an organization, for everybody, back there building startups. So organizations are like organisms in a certain sense. So they keep becoming complex as they grow in scale. So maybe a general metric that I use is that as soon as the organization grows 10x in size, you literally need to rebuild the whole organization in terms of how you're managing the cash flows. There are maybe new opportunities. Maybe you can now reach out to Recur for debt financing. You have grown in size, and then maybe if you do a 10x in employees, maybe earlier people used to come at one place, now with remote, etc. So that's there. And you go another from, let's say, another 10x, the whole org needs to be rethought about things. So I think that's one of the key things that, those same, and then same goes with people, many times people will be able to scale with you. As the organization goes 10x, there are new challenges to come up, especially with the founders and core team. And many times people will fall behind, in the sense of where they can manage the unit and the business. So it's all part of the game, I would say.
Interesting. Keshav, we are now seeing, again, thanks to the advent of Shark Tank in India, startups as an word is become more common. It's now become common parlance. Like most of the time when even I'm visiting tier 2, tier 3 cities and sort of having fundraising discussions, people sort of understand कि यार धंधा क्या है, क्या करने की कोशिश कर रहे हो. One key thing that we are always telling them that, startups as an asset class are not mutual funds, which is backing exactly what Shanti said. Understand the nature of risk that we are taking. We are also seeing an advent in messaging based D2C companies, right? Omni-channel marketing, very firm in terms of catching themes. You started a reward company as well. How did you think about when you started a trading business, which was more in consumer goods, and then decided to look at a tech play in the reward aspect? What was the decision making behind it? How did you think about it? Was there an opportunity, a niche that you saw, or what was the fundamental decision making reason?
Yeah, so when I entered the reward space, we also started as a non-tech reward player, but we knew that if we had to scale the reward business, you had to do tech, right? And you had to invest money into that business. My reward business was not profitable from day one. But what we definitely did was, the first 4 months, we figured out whether we had customers, whether we had the right products, whether our distribution channels was working, and why would someone come to us and not to an organized player who already has tech, been in the industry for 4 or 5 years, etc., right? There's still some things that players in the industry were abusing, if I could use the right word, right? For example, if I would pay money today, my money would get loaded 2 days afterwards, and then I had to start my reward program. I would not get a fair share of my breakages, etc. So I remember last Feb, when we started off the rewards business, for the first 4 months, we only did a GMV of 5 crores, right? We took it very slowly. We figured out our vendors, figured out our customers, and everyone came and said, without the biggest customer said, we cannot partner with you if you don't have tech. We said, fair enough. But if we had tech, would you come to us? Would you appreciate all of these features that we had? And they said, yes. So after we hit our first 5 crores of GMV in 4 months, we deployed into our tech. We launched our tech platform 6 months down the line. And today we do 5 crores every day in our GMV, right? Now,
that's insane.
For me, that tech call was a call whether market required that kind of tech, whether my customers would appreciate what I'm selling, and whether they would change and come to me instead of the other players that are already in the market, right? So that's something that we picked up.
Very interesting. Again, because of a point that you made, and for the benefit of the room, the space that you entered was dominated by technology, into the extent that there were extremely large equity rounds by VCs that were happening in this particular space. Wasn't a deterrent to your decision making? How did you decide in this particular space? Because there is money flowing in it. Was it, I have the right backing, I'm going to bootstrap this to take on as a David versus Goliath battle, or did you have fundamental belief in something that DV just referred to some time back, which is you will adapt and scale your teams as the opportunity presents itself?
Yeah, at Vananam, most of our businesses are distribution business, right? And I believe distribution businesses are one of the easier ones to scale because you just need to duplicate what you've done at one place and place that at 10 other places or 20 other places and you'll get volumes, right? So I think what we went to the market, what other companies and rewards were doing, they were selling what they had to sell. But when we went to the market, we know what was going wrong. We asked customers, what did you want? And we built our tech according to it. And that's why we benefited, right? There's no different product that I'm selling. There's no differentiation because brands are same. If I'm selling Amazon voucher, my competitor is also selling Amazon voucher. And both of these are owned by Amazon. And he's going to give me and him both, right? The only difference is in the way we differentiate, probably pass on a little bit more margin to our customers, but we did not invent the wheel. We waited, we saw whether the market was right, we got to know whether people were willing to partner with us, and we actually took a large portion of the market share. I mean, our competitors today are 40% down their business because there is no new business that we created. There was no new place that we went to. We ate from an existing market share from funded players. The issue with funded player was they also presented a particular plan to their VCs, right? And they had to stick on to it. Even if the founder by gut knows 2 months down the line, yaar, ye nahi chalega. At times it becomes difficult for him to go to a Series A, B investor and say, yaar, I raised money saying this, but now I can't do this. So I think I had that liberty where if I knew something was going wrong, I could stop it on day 0 and then, just change. So I think that helped us scale.
Got it. I would love for all three of you to answer, and I would love for Shanti to start because while Recur today has about 800 plus companies that are discounting their revenue on the platform, we've evaluated almost 20 times that company. The primary reason of rejection has been cash runway position, cash maintenance, or has been the issue of if I have sufficient cash in my business or sufficient capital backing me, I can create an empire. This is a classic problem statement that we are speaking on a daily basis with founders, something that I'm certain all of us in the room have either faced or this panel has dealt with. Shanti, starting with you, how do we really think about, or how did you think about capital adequacy? What is the right time to raise? What is the right instrument according to you to choose? If you could throw a little bit of light, and then DV over to you and Keshav, I would love to hear your journeys or just generally advice to the room, how to think about capital raising and when to start thinking about capital raising.
So I think it's very interesting, this question, because most founders, when you talk to them, right, they tell you, I want to raise 3 crores and I will run this for 2 years. That's typically how everybody thinks about it. Like, I have very rarely met a founder who is working backwards on the business, right? So, because they will just pick up a number. नहीं, मुझे 6 crore चाहिए. अच्छा, then after a conversation, we'll say, नहीं 6 नहीं 3 crore, ठीक है 3, right? So they very quickly they will change the number from 6 to 3. But I think the way founders should think about fundraise is that if I am at stage A today, and I need to get to stage B, what are my business metrics for stage B, right? Can I work backwards? Now, if I am at an angel stage and I need to raise a series A in 2 years, what are the benchmarks for the series A which I need to meet? And how much capital do I need to raise to get to that business benchmark?
Very interesting.
Rather than saying that, next 2 years, what is going to be my burn? What is going to be my expenses? Let me go raise that much money. If I can't raise 6, I will raise 3. The problem is that when you raise less than what your next round requires you to be at, you're putting this 3 crores also at risk.
Yeah.
Right? Because you will not be able to raise the next round because you are now too big for the angel guy, but you're too small for the next level VC evaluating you. Right? So I think understanding the benchmarks of your own business and your own industry, which is actually very hard to get as data, right? Because as a platform, I know, right, that if you are a D2C company, how much should you be at for a Series A guy, for me to introduce you to a next round investor where he is going to show interest to come and talk to you. And the other mistake, just to add to this, the other mistake which every founder, they are increasingly making, that's because VCs have raised a lot of capital today, okay? And you have to understand how this whole ecosystem works for you to know why that behavior is happening. Now, you have suppose 20 of the large VC firms, they've all probably raised anywhere from 50 million to 500 million. Now, they have all staffed their team. Every team member has a target. right? He has to source 30 companies every month and he has to bring that into the funnel. Now that guy is going to reach out to you and say, I want to talk to you and I want to get to understand your business. You know that you're not ready for that VC. Then why are you going and talking to that analyst or the principal in that VC firm? Because you have already exposed yourself. Sometimes the VC already creates a perception about you because he has seen you too early. And I have seen that constantly. When I take that founder to the VC, he says, no, I've met this guy 2 years back. I don't want to talk to him anymore. Because at that point of time, he has already made an impression about you. But, and the founders will come and tell me, I have interest from 5 VC firms. I said, whom have you spoken to? They have spoken to some analysts in those 5 VC firms. And they're like, no, he has told me to come back after 6 months. Of course, that is what every investor is telling because he doesn't want to tell you no. Indians, we are very polite, right? We are not honest with our founders. No, these are very real issues, Amar, right?
I think
so.
Shanti,
We are
pertinent.
not honest with founders. And I think that the best service you can do as an investor to a founder is be very honest. Honest with the founder, right? Say that you're not ready today because of A, B, C. Okay, don't say that, why don't you come back to me after 6 months after you have hit 100K in revenue, right? And that guy is going to go on a spiral, right? Because he is going on a complete wrong track. And I have seen this multiple times, companies shut down because they have actually gone down the rabbit hole now, right? And they are constantly meeting more and more and more and more investors when they are not ready to fundraise. So I think this is this capital raise, right? If you get into the trap of capital raise, you will never be able to build a business. I love what he said, right? Like people can tell you, no, I don't like this business. In my opinion, honest opinion, after having built LetsVenture, I think nobody knows the real answer. Okay, he's just giving you a lot of BS because he doesn't want to tell you that I don't want to fund you. And you have to find your genuine investors. There are a lot of very good investors in the ecosystem who will sit down with you, ask for advice, you will get capital. Ask for capital, you will get advice. Very, very simple rule of the thumb.
Absolutely bang on. Shanti, I think that was filled with advice for this entire room. There are so many points that have come out of that. One of the crucial ones that I'm going to reiterate for this particular, for the room is that binary decision making is crucial in capital raising. When we started Recur, the idea was not to ensure that everyone gets facilitated capital in the form of debt or equity. It was to ensure binary answers. Is it doable or not? Because as founders, as sort of promoters of our company, what I am in control of is my time. And hence, the point that you have raised, that speaking to the right person at the right time and getting a binary answer out of it is crucial from a capital raising standpoint, because we have to build our businesses. We are not in the business of raising capital. DV, would love to hear your thoughts around it. Similar, how did firstly you think about it? You've already shared your journey, but you've also done angel investing. You've been advising a lot of founders, right from Joka to IamCal. A lot of folks reach out to you. What is the advice? When do you tell them? Do you tell them about instrument? How do you tell them to think about fundraising?
So I think every startup journey is very unique. And there is no playbook also to run a company. It has to be very founder discovering himself and how he or she wants to build it. So probably Shanti is the best person to build LetsVenture. That's when, as I said, maybe I was in the right place with the Zostel challenge, and it's something about me and traveling. So I feel that as first time investors, as Shanti said, that you'd need to probably lose 5 lakh, 10 lakh. Hopefully you write a small check and then you can come back and learn. And similarly, as I would say, even as founders, especially venture capital and news media, Shark Tank, these are glamorous. At the end of the day, if you're building a business that's profitable, that won't get you in newspaper, right? You need the valuation, you need the unicorn status. That's what people mention in annual presentations, 100 unicorns, something, right? And so that's about it, right? So that's media over there. And once you have gone through those cycles, maybe I would say that I've been around for a while to then truly enjoy building businesses. And then I would say that building business is a totally different skill than maybe raising capital or etc. And I think you shouldn't even look at raising capital is actually the right word, because maybe then debt is separate, but the equity capital, rather than raising it, you should really look at it like bringing in a partner, right? So who do you want to have as a capital partner? What does he, she or they bring to the table? I think that's pretty important. you shouldn't really rush into a relationship, because it looks hot at the first
Literal
time.
advice.
Right? So same with the deals. So that's there. And so debt, obviously debt and other instruments, they are all there. And because we work in real estate, there's a lot of franchisees. So then there's this asset. So people raise debt on the asset or an equity on the asset. So various different kinds of capital. Who is interested, who you are selling, what you are selling, really have to be very directionally approached. And, it's equity is actually the most expensive capital out there, and once you give it, there's very difficult to take it back. I'll tell you with experience also.
No, again, very two crucial points, DV, that you've referred to. That one, building a business was supposed to be boring. When did it become glamorous? Like what happened to all the operating and business metrics, right? Where is the profitability? Where are the numbers backing the valuations? Very extremely important point. Keshav, you built a bootstrap business, right? You did not really sort of venture out for capital. Why? Simple question.
Yeah, when I started building a business, right, raising capital was glamorous. Raising capital was sexy, right? I think to add to Shanti's point, most of your investors on LetsVenture early on could be those Marwadis who are sitting with $3 million in their pockets. मतलब 25 करोड़ उन्हें लिए कोई बड़ी बात नहीं है. आप कमेटी लेके जाओ 1 करोड़ ऐसे लिख के देंगे.
2,000 crore FDs, man. That's where you start with that.
So, I mean, if you just go back 20-25 years time, right, when the Reliances and your Adanis and Tatas were also scaling up, if not at this grand stage that they were, right. जब कोई बंदा किसी से पैसा उधार लेता था ना, वो बात मार्केट में नहीं जाती थी, वो बात मार्केट में सिर्फ डिफॉल्ट पे जाती थी. And it was never very good to raise that much capital, while capital was always required for business, right? Come the startup stage, most of the founders who wanted to open startups thought, I want to open a startup so that I'll raise capital, sell shares, become a millionaire, right? While Flipkart did a lots of good, the 5,000 crore also showed a lot of bad to the world, saying कि यार हम तो कुछ भी बना लेंगे, नुकसान में बेचेंगे और बिक जाएगा. No one realized that there's only 1 in 1,000 startups that can create a character change, right? Which not everyone can. So even today, I think if we just stop glamorizing capital, if we realize capital is a fundamental business need, it is just like your food. No one posts every time's food photo on your social medias, right? It's just like food for your business. You will be solved. Even today, you have so many ways of raising debt capital, equity capital, asset financing, lease financing, and everyone's available everywhere. You can do anything with your projects. But if you don't feel good about raising equity capital, but if you feel good about achieving a milestone with that equity capital that will push you to the next round, I think that's when we'll prosper a lot more, right? That's been a theory at Vananam.
Very interesting. This is...
I run a workshop for founders. The first slide is capital is just an enabler, not the goal of your business.
Beautiful. Very well said.
So please remember that. And then we'll start our fundraising workshops, of course. But we always tell founders, don't raise capital if you don't need to raise capital. Don't raise it under pressure because my roommate raised so much money, now mujhe karna hai. Especially with the kind of, your ecosystem, right? I'm sure a lot of people get inspired by their IIM batchmates, by their IIT batchmates.
Yeah.
And I think there's a lot of pressure.
I think another key aspect that all three of you have referred to is that just because equity does not come with immediate covenants like debt, a lot of folks think that there's no bells and whistles attached to that money. It's safely, I can tell everyone in the room, a lot of us, or all of us here have raised capital that has more bells and whistles than debt capital, because at the end of the day, you're giving a part of your ownership away, and hence it is pivotal. Towards the end of the panel, and so that we all have enough time to network, I would love for the three of you, in your words, in your journey as an operator, help us decode what, according to you, is India's Goldmine moment, and why is it the right time to build in India? We've spoken about Make in India. We have already discussed numbers. We've seen that this is a cascading upward trend. We have seen the highest flow of equity capital in this particular year. We're seeing deals aplenty, including early stage to late stage. Why? Is it we are a younger... Other geographies are growing as well. Other GDPs are growing. Other economies are benefiting as well. Why India, Shanti?
So whatever numbers you said, right, they're all retrospective index.
Yep.
Or what has happened in the past. I think you have to look at the future. And I think this decade belongs to the Indian entrepreneur, honestly, right? And the reason is that India is a consumption-led economy, right? India has the highest number of mobile users and data users in the world. We are 600 million mobile users and data users globally. I mean,
Wow.
that's like 3 countries put together, is the number of people who have access to mobile data and to the internet, right? Because you have that, and we are the world's largest payment, which is public infrastructure. We are the only country in the world where payments is not private. This is the only country where Master and Visa card are not the leaders. UPI is the leader, right? If you have data and you have payments, you have commerce, right? That is one. Second is that, I don't know if you saw this video, but there is a video on the rise of the Indian elite, right? And you should watch that video, because that says that the women of India today, they're actually the earning power of women in India is higher than the earning power of men in India, right? Which basically means you have actually created an inclusive society, which basically leads to higher consumption. It's a higher growing middle class, which can afford more, right? All of these factors are tailwinds for the next 10 years of the Indian economy, right? So I'm not even see, startups, all this is all okay, right? I think you have to see of how big the market is today for you for the next 10 years.
Yeah.
Right? And, if you look at organization and the unorganized sector becoming organized, India stands at the forefront of that, right? I have just invested in a company which is based out of Lucknow, which is organizing street food vendors. So he's building supply chain for street food vendors.
Super exciting.
In just 18 months, he has done 122 crores.
Oh, that's phenomenal.
Yeah. Right? And I don't think that kind of market size is available anywhere globally. Right? We are the largest open economy in terms of democracy. We are not like China, right? We are not shutting down global players because our local guys have to compete with those global players. I think there is a lot of global capital waiting to be deployed, right? You look at every other country, India is where the capital is going to come in. So, and I don't see, unless we do something horrendously wrong and we go get into World War III or something stupid happens, I think this economy is all set to grow.
Absolutely.
So, there is, this is actually the best time to be a founder.
DV, that thing that cues you in itself. I would love to hear your thoughts around it. It's the best time to be a founder.
Yeah, I think, over the lots of period, it's always keeps getting better time to be a founder. I think the world's headed towards that direction. It's honestly, guys, we are heading towards an information age society. We have been an industrial age society for almost 1,000 years. So, now it's the time, and all of the startups, etc., they are literally, removing a roadblock from a flow of water or a stream that's already flowing. So tech is really, the enabler, whatever you do, to really scale these things up. That's what startup is largely about. Now, when you look at, this decade, so this, I also feel that this not just, obviously, starts off with being the India decade, but what really happens after that is we have a seat at the, we are, once you start becoming right now, let's say a $3,000 per GDP consumption, if you'll study other markets, that's when really the consumerism starts to kick off, right? And then it's just so exciting with the kind of innovations that we can do and then take it outside, right? Maybe it's the quick commerce over here. Maybe even we have, I've moved my base to San Francisco earlier in January. I'm taking Zostel over there. Literally, because we were in India, we were able to, hustle around, do some small things, etc. Over there also, people only get Patel Motors right now. They don't have a good youth travel segments, etc. So super excited, for the, Indian century. And I think, there are a couple of things, but it's a brown time, I would say, on a global scale. So super excited.
Yes. Again, I think you all are just queuing each other in. I can pretty much go take that chair. But yeah, sorry, Keshav, would love to hear that. The bootstrap businesses, is it the time for the services business also to take off in its entirety?
Yeah, I think if you're building something in India, the global capital is looking at you, the world is looking at you. When was the last time that US was against sanctioned a country and your prime minister could go to that country and come back and still plan a visit to the US, right?
Very well said.
PM Modi ji went to Russia 3 months or 6 months later, went to Ukraine. We are buying Russia oil because oil is cheap. We are selling it to world's players क्योंकि वहाँ से markup मिल रहा है. I think इससे अच्छा कोई time नहीं है यार इंडिया में रहने के लिए. The markets are blooming. You don't have sanctions from any place. आज से 15 साल पहले the fear that you would have, यार हम ये नहीं कर सकते, ये क्या हो जाएगा, वो नहीं कर सकते, वो क्या हो जाएगा. When US said they would not give us dollars for the Russia trade, I think we said okay, ruble और INR में कर लेंगे, क्या बड़ी बात है. And US still couldn't do anything, right? So one, geopolitically we are very strong. Second, our workforce, I think we have the youngest population. We also, for most of the times, have a population that did not believe in work-life balance, right? I think Indians historically always worked for 12 hours, 10 hours, 14 hours, unlike your foreign counterparts. And third is your data is so cheap, right? You if any of you guys go to foreign countries, we don't use that much data as much as we use in India, right? Because the data there is just so costly. People there are shocked if we're paying so less in India. So I think because of data you have internet, because of internet you have access to the global world, you have no sanctions. I think what else do you need to grow?
Couldn't have decoded it better. Sorry, Shanti, you were saying something.
Yeah, there are two more things. One is, of course, the stock market, right? Best time for companies to go IPO. Like a company which is doing 100 million globally is coming back to India to list, because in 100 million you are actually like the highest, like
the market cap
in the Nifty 50, right? But if you go to US, you are small cap, right? So it's a very attractive market to list. And second is global GCC, right? I mean, we are becoming literally like the power center, which basically again means better people employed, more kind of growth in GDP. See, all of that kind of puts together India at a very, very strong position.
I think this is the only market where you want to ask for 12 crores in an IPO and you get 2,500 crores of subscription. Yeah, I mean.
Very exciting to sort of also use this particular point that you have mentioned into a small little segment that I have really been looking forward to, taking inspiration. Yeah, taking inspiration. We've spoken about Shah Rukh Khan, Rahul Arya. So yeah, taking a little inspiration from Coffee with Karan. I'm going to ask you a series of 5 questions before we open it up to the floor for questions to the panel and then just general networking. I'm going to ask you a series of 5 questions. Let's go in this order. DB, then Keshav, Shanti, you. Just the first thought that comes to your mind. Yeah, I don't think there's any right or wrong answer. So yeah, first favorite Indian entrepreneur.
Favorite Indian entrepreneur.
And why, obviously. One line.
I'll go with. I'll have to favorite Indian. Let me take.
Okay, let's go. Keshav, favorite Indian entrepreneur.
Dhirubhai Ambani sir. Yeah.
Dhirubhai Ambani sir. Why? Obviously because of what he's built. Shanti.
For me, it's Nandan, just because I also interact with him a lot.
Got it.
And I just think his amazing clarity of thought. When he sees you, he thinks scale.
Wow, wonderful. I think back to you, DB. You got some extra
I
time.
think we've got a couple of them covered, so I'll go with Bhavesh,
Nice.
So it's been...
Why?
I think he's our angel also. But, he's been...
The recording of this session needs to reach him somehow. So, yeah. Okay, great. I'll keep this on you only. According to you, looking as what Shanti also referred to more in the future, favorite Indian sector / segment to watch out for? Quick commerce.
I think quick commerce, consumerism.
Very interesting. I'm guessing.
For me, it's more sustainability and EVs and a lot of things around sustainability.
Got it. Understood. Linked to that favorite Indian startup, and you all can't say your own names or companies that you all have invested in. That's a fundamental reason I want. There's a why also behind it. Favorite Indian startup?
I think Razorpay, they really, did a lot of grunt work, established a great tech culture, keep low, in that sense. So, bit inspiring, I would say.
Nice. Keshav?
For me, it's Zomato.
Zomato. Wonderful. And is it because they broke the
market, multiple good acquisitions, and they actually proved the stock market wrong. When the stocks were supposed to go down, they just 2x today.
Wonderful. Shanti?
For me, it's Urban Company.
Company.
Because of their high governance and just how they kind of stand for that good governance in companies.
I love how all your answers were also linked to everything that you spoke about in a way during this particular panel. The last question is something that we also asked Ashish, Rohit, all of them that were there in Building in Bharat 2.0, and we never got a clear answer there. If you could invest in only one thing, and it's specific because we are putting you on the spot, right? The best would be all of it. But if it was only one thing and it was early stage investing, what would you invest in? A great market with an extremely large TAM, a great founder, or a great product?
Great founder.
Why?
Oh, you'll figure out the market, man. Markets. The only people did not invest in was that what is the market size of backpacker hostel in India, how large it will grow, So there was no market only, so.
Nice. So you're a testament to your own story. Nice. Keshav?
Same, a great founder है. वो कोई पैसा नहीं डुबाएगा. He'll flip the structure. He'll ensure your capital comes back.
Nice.
Double index on founder.
Wonderful. I
Always.
think that's sort of a unanimous answer by from all of you. And before we sort of open up,
We are in the business of finding good talent.
wonderfully
As a
said.
venture capitalist. Honestly, that's the basic, very non-glamorized part of investing. But you're basically trying to find the best people to invest in.
I think summed it up perfectly in terms of how we have approached the end of the panel discussion. It was an absolute pleasure speaking with the three of you. I have had the opportunity to speak with each of you individually as well. Extremely inspiring what all of you are doing. Would love for the room to open up. If there are some questions that you would want to direct to the panel, okay, right there at the end, one question. Otherwise, we will have some networking going on as well after this.
Hi, Shubham here. So my first question is in relation to the last question that you asked, where you said you're double indexed on the founder. I think every founder thinks he's the best and he should be picked, right? But what do investors really look at in a founder? How will the investors decide that, yeah, this is the founder that I want to index on or double index on?
Best to take, but I'll just add before that, because I come from the non-investor lens, so she can tell what's exactly there. But I just do a good, a thorough, honest discussion. Why does he want to do it at the end of the day, or she wants to do it? And if they're super passionate about it, you like the vibe, you feel that's honest, you take the bet. It's pretty simple. That's how I operate in. There's not even enough time for at least a founder to spend. It's just usually 1 hour that you can invest and decide. Yeah.
So before she could go in, just continuing to his point, I would look whether a founder also has detachment capability, that he's not so invested and in love with his product. He needs to be in love with his market more than the product, right? He should be able to tweak his product.
Very interesting. Shanti, yes.
So I think if there is one point, in fact, today morning we had a pitch call with the founder where 5 of us were on the call, morning 7 o'clock. And this very stellar founder already has built traction. At the end of it, I really wanted to invest. But the rest of the people, one of the person says, I'm not convinced because I think he's not coachable. He is not just listening to what we are trying to tell him about the market. It is not like, see, sometimes as a founder, you need to have conviction. And you need to know that what you are on the path, what you're trying to build. You are living that idea 24/7. Nobody can know it better than you. But sometimes it's good to, when somebody is giving you a very different perspective, actually going back to the non-attachment part. If you're able to take feedback and say, maybe I have not thought of this. Right? And that comes out in conversations very easily. Right? And that person said, no, I don't think he's coachable. And I thought that's a very interesting point, because it becomes very hard over time then to try to work with that founder, especially when you're going in as an early stage investor, if he's not willing to even listen to what you're trying to tell.
Just to add my 2 cents to that, while we are evaluating, a lot of discussions happen. One key thing that I generally share with everyone is that an investable founder or generally an investable promoter is that can make money with no money. Then we are certain they can make money with money. And hence it is more around building something, knowing that there is a gap in the market rather than building something because I want to build it. So there was a question at the end as well.
Good evening. This is Nivin from Draper Startup House. Divi, congrats on scaling to SF and Dubai. House. Okay, so my quick question is that, which stage in an entrepreneur journey that the entrepreneur should also consider building for globe? Because building for Bharat is one, which part? Because we saw Blue Smart scaling to Dubai and you guys moving to SF. So which is there any particular time that we have to changing the UX or UI, things like that? I want to understand.
Yeah, we've just also recently expanded just purely because we saw a product market gap over there. The kind of things that we do, they aren't there. The Zoo House or even the backpacker hostels that we are taking over there. So I largely operated from that side that, we were very healthy, running the business profitably, take a good risk in opening up a market. And then, maybe new markets are such things that we couldn't really send the team. So I had to go, it's a founder problem. There are in companies some issues that founders must solve themselves. And we just felt that there's a market gap and more than anything else.
Brilliant. To ma'am, LetsVenture, like when you guys evaluate a startup, you guys consider the fact that one day we have to scale it to globally, or first of all, we'll figure out the Bharat, then how you guys evaluate scaling a startup while you guys investment thesis?
So honestly, we look at potential of it to go global, but I would not necessarily evaluate you saying that whether you have global on your roadmap, right? Because I think, while I build LetsVenture, and I think all the founders agree here, I think you can only probably see 6 months to 1 year to the future, right? Because a lot of things change as you start building your company. And when it comes to global stories, there are a lot of companies who are built for the global market from India, like Freshworks. From day one was never an Indian solution, right? They came to India after they became a global leader. So it really depends on what you're trying to build.
I do note that we have time for one question more. Otherwise, we can break and kickstart. Yeah, there's one question right there in the center.
Thank you. Hi, I'm Shubham Khitan from Kiaro. Shanti ma'am, you had told that your ideology for investment is somewhere surrounded towards sustainability. We're also building a sustainable brand, but what I come towards is that we've heard this a lot from people saying that sustainability is a buzzword, and that that's because that's why brands are flocked around that particular word. But what we're trying to do is build something which might not be really important for consumers at this point of time, but within like a period of 3 to 4 years, it'll be very important for the country itself. So how do we actually tackle that? I mean, I would love to meet you in person again, but then this particular sustainability thing.
Don't die, huh? Don't die for the questions. That's it. But yeah, I think you'll get better advice, but yeah.
Yes. So I think you can't use just buzzwords. It has to match. It has to be part of what you're trying to build as a core value of the product. I think that is important when people, like saying that I have AI. Like somebody told me, you can put AI and that's like the pixie dust on your presentation, right? Because that will give you the eyeballs with the investor. But jokes apart, I think you have to create the plan, because what we are seeing from investors today is that instead of trying to tell companies to be ESG compliant, they are actually trying to look at ecosystem of companies which will move towards ESG, which is where they are saying that we will actually invest in companies which will probably become ESG compliant 3 to 4 years from now. So there is no one answer to your question. Is my...
Thank you.
Great. We are going to break the session now because we are sort of reaching into time. Firstly, Shanti, Keshav, DV, thank you so much. It was absolute good fortune to share the stage with you all. Extremely informative. I do know there are a lot of folks that will reach out in terms of further discussions, but thank you so much for your time. Very enriching. I know, DV, you're going to say something.
No, I just wanted to thank you. Thank you, everybody. And I'm easily reachable. DV Coolster on X and dv@zo.xyz if someone's not able to meet.
Yeah, and extremely sort of approachable. Just say Zo at the beginning. Yeah, that's the keyword. Okay, great. Awesome. No, thank you so much.
Decrypt,